Good morning, good afternoon, good evening, depending on where you are watching this video from. My name is Leon Tsepo Mashalani. I hope you guys have been awesome. Today's episode, we're going to be talking about risk management and what are the biggest mistakes that traders make when it comes to risk management. So there's so much information floating out there on what risk management is and how you can, but nobody actually explains the how part, right? And the information that is currently floating about risk management is not information that can be used by all sorts of traders, and by all sorts of traders I basically mean traders that also have small funds. So without wasting any more of your time, let's get to the video. Okay, we back. Now, before we can enter into anything, right? This video is going to be short, okay? Before we can get into anything, we first have to actually describe and answer what exactly is risk management, right? Because you cannot understand something if you don't even know what it is, right? You can master anything or something if you don't even understand what it is. So let's first start by defining what risk management is in trading, right? So risk management in according to the whole forex industry, so this is what I describe risk management is, right? Now, risk management is the process of monitoring and managing potential risks in the market so you can have the advantage to minimize the negative impact the market may have on your trading account, right? So if you ask a lot of people, right, what risk management is, everybody will be telling you about stop losses and all of that. Because once upon a time, I was in one of these Telegram groups, right? And every single time somebody will send a signal, they'll be like, use risk management, use proper risk management, right? And small lot sizes don't necessarily mean risk management, okay? Using small lots can technically mean that you have a small trading account, right? Of which there's nothing wrong with it. But how do you manage risk on a small account? Because this is actually one of the things that they'll be telling you to do, right? Number one, they'll be like to you, do not risk more than 2% of your trading account, right? I'm going to show you this information is actually true, right? It's very true, but it does not accommodate every single trader. And by every single trader, I mean traders with small accounts, right? So on today's lesson, I'm actually going to show you and teach you the proper way of going about managing your risks in the market. Okay, so the second thing that they love, put your stop loss 10 or 15 pips above or below your support resistance level, right? These ideas are all great in theory, right? They're all fantastic in theory. When you sit down doing the maths, you're like, I'm risking between 1 or 2% of my account. My account is going to survive. But there's actually factors that we are not taking into consideration, of which are very important, okay? And these factors include things like this, right? Let's say you have a 2,000 Rand account. Okay, let's say you have a 2,000 Rand account and this is the best that you can do. And question then now becomes, how do you apply these two rules on this 2,000 Rand account, right? These are the things that we need to consider. Okay, now look at this. You are stuck with 2,000 Rands, right? And you have to now make a choice of, okay, you know what, I have got to have a stop loss of 10%, of 1% or 2%, right? And now we are looking at a gap of 10 to like roughly 40 rands from this, of which when you put it in the market, practicalizing it, it literally becomes impossible to place a stop loss ranging between 10 rands and 40 rands. We are all traders here. let's stop beating about the bush and let's actually tell the truth. I'm not saying it's impossible. All I'm saying is, how can the average trader apply this with such capital at hand? Right, so these are all factors that we need to first consider before we can all conclude, be like, you need to have like kind of was that 1% or 2% risked on your account. But when you sit down and do the maths, you have $1,000, you have $1,500, you have $2,000. Can this be practical in the market? You know what I mean? You know very well you know very well that you're unable to put a 10 rand or 20 rand or even 40 rand stop loss. Right, now this entire idea then now becomes a bit void. Right, it becomes a bit impractical. Right, so on today's session, we're going to be talking about exactly what it is that you need to be doing for you to be able to expand the lifespan of your account and give yourself the ability to manage your funds properly without, having impractical theories in place. Right, we need to have something practical, we need to have something doable, we need to have something that when you sit down, the maths is correct. Right, now this is actually something that I do every single month. Okay, so let's say you have the same 2,000 rands, right, in your trading account, right, and what I'm going to show you is literally what I practice. This is not something that I just teach and then I don't do. I actually do this. Okay, and if you actually take this into consideration and actually practice it, it's gonna prolong the lifespan of your account, whether you believe in what I'm saying or not. Right, now in 1 month, a month has 4 weeks. Okay, so what you basically do is you take this 2,000 rands and you spread the risk. How do you spread the risk? By dividing the money between the 4 weeks, right? It also depends on what kind of trader you are, which is why I actually started off from the monthly perspective. The monthly perspective, if you're a person who enters the market like once a month or twice a month, then you don't have a lot to worry about. But if you're someone now who's like, consistently putting a trade or 2 per week, this is how you can go about it. Now you take your 2,000 rands, you divide it into 4 weeks, right? You have a total of like 500 rands stop loss for every single week. And this, I believe, is more than reasonable. If it's not reasonable, then that means you are gambling. Remember, in this community, we are not a community of gamblers, but we are building a consistent system that works, right? And in doing so, we have to be practical and we have to be realistic. So if you're somebody who'll be like trading once a week, then split whatever amount of money you have in your trading account into 4 weeks instead of taking your entire trading account and focusing it on one trade, which might go against you. You know what I mean? Because I always tell a lot of people that the best thing that you can do if you are going to blow your account, nobody wants to blow your account, but it's best for you to rather blow your account gradually than instantly blowing your account. Because when you blow your account bit by bit, you actually learn something from the process. But if you take your 2,000 rands, blow it immediately, you learn nothing, right? But you split the risk. In splitting the risk, you actually now look at, okay, I blew the first week, what went wrong? Second week, try to rectify the mistake. If it so happens you blow again, you actually learn from this process, right? You actually learn from this progress, and you actually give yourself time to actually recover the previous week's losses. We don't do revenge trading, but I'm just giving you something practical and something that actually makes sense. Okay, I'm not gonna teach you those things that are floating out there. Those guys are basically gambling. You take 2,000 rands, you want to make 20,000 rands the same day. You know, what if you blow the money? As fun as it is to think that you can, you know, flip the 2,000 into 20,000, it's all nice and games until you get into the market. What a lot of traders are not looking at is the possibility of the trade going against them. What if the trade goes against you and you risk your entire trading capital on that one particular trade? It's foolish in this instance, right? But you take your money, you split it, you spread the risk throughout your 4 weeks, and then you have like 4 trades that you can learn from. You know, 500 rand stop loss, very reasonable. So you know that, okay, for this entire week I have $500 worth of trades. Right? Look, it's something. You give yourself a target that, you know what, this week I'm gonna double or triple the account, the $500, and once that's out of the way, you take the money, you withdraw it, put in your savings account, you go on to the second week, you do the same thing over and over and over and over and over and over again. That's how you build consistency. So you cannot, it is literally impossible for you to build consistency if you are not spreading your risk. It's literally a waste of time. What will you learn? How will you be consistent if you're constantly gambling in the market? Right? So these are things that we need to take into consideration before we can even, you know, sound smart here, coming here, you know, cocky and everything. Let's be practical. Let's be realistic. Okay? Now, each week has 5 trading days. Monday, Tuesday, Wednesday, Thursday, Friday. If you are now the type of trader who's like me, on the market every single day, you're looking for a trade setup, you know, then this is more for you. So each week, remember, each week has 500 rands. We are still there. Each week has 500 rands, right? You still divide it into 5 days. You have 100 rand stop loss, 100 rand stop loss on Tuesday, on Wednesday, on Thursday, on Friday. 100 rand stop loss is it's big. It's gigantic. That means for the day, you know that, you know what, I have $100. With $100, I can roughly add 3-4 trades depending on the leverage, the amount of leverage you took. But it can accommodate a lot of trades. You know what I mean? And in that instance, you can even double, triple, quadruple your risk. You risked $100. I don't know what leverage you're gonna be taking, but you come up with like $500 or so, depending on how many trades you placed. And of course, things like drawdowns and whatnot, but that's a topic for another day. Right? And in this instance, if you have divided your 2,000 rands into, there's 20 trading days in a month, you have 20 100 rand stop losses. That is a lot. You have split your risk in a way that lets you be always on the safe side. You are always safe. There's nothing. If you lose on Monday, hey, fine, it's okay. You don't get on the market with Tuesday's risk. That's not what you do. If you lost on Monday, you take the L, move on to the following day. Bit by bit, you grow. And bit by bit, you are building consistency, and you're also building your confidence in the market. You don't have to don't feel like, it's too small. You know, listen. There's a student of mine who is very impatient, right? She'd be like, man, I made like, you know, however amount of money she be making that day. But I always be like to her, you know what, listen, whatever amount of money, even if you make 50 rands, it's 50 rands more than you had. It's 100 rands more than you had. You understand? So don't feel like the amount of money you are making is small. Remember, you are building something. You are building something. So do not be impatient with how much money you are making. It's very important for you to have this kind of mentality. The kind of mentality that, you know what? From this 100 rands, even if I can make another 100 rands, it's 100 rands more than I had before. Right? That money you take, put in your savings account. And you keep the cycle until now you have doubled or tripled your overall monthly trading capital. And in that way, you increase the risk again. Let's say you double the 2,000 you had into 4,000. Split the risk into 20 trading days. Now you are risking 200 rands per day instead of, 100 rands. Now you have 200 rands worth of trades in the market. More profits. Gradually doing that, gradually building consistency. The whole idea in trading is for you to be able to do the same thing over and over and over and over and over again. Nobody just becomes a millionaire. Nobody just becomes a billionaire in this industry. You have to find an edge, and whatever strategy that you have has to produce the same results over and over and over and over again. That's the whole idea. So don't feel pressured into, wanting to, like, from 100 rands I need to be making like 1,000 rands a day. No. That's the wrong mentality of going about that. If you can double or triple it, it's more than you had before. Tuesday you do that. Let me show you something. If somehow, okay, let me just give you a rough estimation. If you can make 500 rands a day, if you can make 500 rands a day, let me show you something. You make 500 rands a day, multiply that by 5 days. It's 2,500 rands a week. Multiply that by 4 weeks. It's 10,000 rands consistently every single month. Of course, you're going to have losing days, but more or less you have like 10K consistently coming into your bank account. By simply doing what? By simply just adhering to risk management strategies that make sense. Right? If you make 300 rands a day, that's like 6K a month. It's 6,000 rands more than you had. Remember that. Don't feel the pressure of wanting to take 500 rands and make 50,000 rands. Guys, let's be practical. Trading will make you money if you are practical and realistic. That's all I can say to you. This risk management strategy I use on a day-to-day basis, on a month-to-month basis, on a year-to-year basis, depending on whatever time frame we're looking at. Okay, so I don't need you guys to also be like taking the mentality that you are seeing on these platforms, the social media platforms, and thinking that that's what trading is. Trading is not gambling. What you're seeing on social media is people who have money, right? You see the one, don't risk the saying that say don't risk more than 2% of your trading account. That applies properly, but to people who have like a lot of money in their trading accounts, like let me show you something. If we say that in the instance of like 100,000 rands trade on somebody's trading account, 1 or 2% is like you're ranging between now like 1,000 or 2,000 rands. That's a lot of money, but it won't apply to someone like you and I with like 2,000 rands in their trading account. You know what I mean? It won't apply. It won't make sense. You know what I mean? So everything has to make sense. Everything has to be practical. Everything has to, the maths has to maths. You know what I mean? So do not follow this doctrine of believing or thinking that, I can take this 500 into 5,000 the same day. And then once you don't achieve that, you feel like, you didn't, or you are a failure or something of the sort. You're not a failure. You are just being impractical. And it's time for you to be practical. What you're seeing on social media, majority of what you're seeing on social media is simply advertising. These guys are just marketing them, advertising themselves so that you can buy their courses or buy their silly signal services, which is I will not sell you guys signals. You know this. I'd rather give you the information that will help you to create your own signals rather than being spoon-fed. I'm not gonna spoon-feed you guys with signals. I'm not even licensed to be giving signals. So that's not something I'm not gonna do. That's not something I'm gonna do, pardon me. It's not something I'm gonna do. I'm gonna teach you how to trade. Okay? So without wasting any more of your time, guys, thank you guys. You have been lovely. I know that I said I'm gonna have a live session today, but I didn't make you guys aware that I have like a church commitment. So I need to be at church today. There's a prayer and fasting. So I'm like, I gotta go there. Besides that, I'm in media, so like I have to commit to these things. So till we meet again, next episode we're going to be talking about timing your trades. So be ready up on that. And till we meet again, it's your boy Leon, the Lord's Lion. That's what's up.